Good morning and welcome to our webinar on the North Carolina Workers' Compensation Law. Thank you for joining us this morning. I think you'll find the presentation to be informative, and I hope that you'll learn something that you can either use in your business or that you can share with another business owner. So let me introduce myself. I'm Michelle O'Connor, and I own O'Connor Insurance Associates along with my husband, Terry. Terry is our commercial producer in the agency, and he's the one that does all of the business insurance. He has a partner, her name is Janet, and she backs him up as well. So the two of them are the ones that will be answering all the questions, but I'm the one that's going to get our presentation kicked off. Without further ado, you will be able. And there we go. Okay. That we have 2000, and so that we've just celebrated 17 years in business. We are Charlotte, North Carolina, and we are an independent insurance agency, and what that to you is very carefully their claims service and their overall value to our clients to ensure that you're getting the most coverage for the least amount of. As I mentioned, we also have a team of professionals. Terry and I own the agency together. Full personal lines department as well, with a couple team members in that department, and then Terry heads up our commercial department. He's in charge of a backup for him as well. Kinds of help a little bit different. The first reason is because we believe in education. Why we're making sure that there are questions about that hasn't been answered, so that you understand your responsibilities as a business owner, you understand how to protect your employees, and most of all, so that you don't get in trouble for not following the law as well. If you have any questions during the presentation, you can email them directly to Terry at oianc.com. We will be checking them throughout the morning while we're doing the presentation, and at the end we will answer as many of them as we have time for. So let's get started. So this is the letter that one of our clients received in the mail in December, as you can see. This is the letter that came from the North Carolina Industrial Commission, and this is what prompted us to put this webinar together. We don't want any of our clients to, and most importantly, there's a fine associated with it. There's also the potential for there to be charges posed on an employer. But most importantly, we don't want you to have the hassle, the aggravation, or the time that it takes to deal with this, let alone the fine or the potential to be arrested for it and have a charge on your record, when it can all be solved if you just understand the law as you're hiring people. So Terry's going to take the presentation over now and explain to you exactly what your requirements are as a.
Great, thanks, Michelle. I appreciate the opportunity to educate our clients and any other people out there who are wanting this type of information. The law requires that all businesses which are regularly employ 3 or more employees obtain workers' comp insurance or employers. There is employ 3 or more employees. Where some of the confusion comes in is who's included in the count for employees. One of the main things regarding that is automatically, if you use or have the presence of any radiation type machines, maybe like some of my chiropractor clients or a physician, they automatically have to have workers' comp in place, no matter what the count of employees, other than if it was just owners of the business, maybe the president or LLC, then it would be the members. But as soon as one employee who is a W-2, depending on how it work for you, then automatically you would need a work price. There's also some special regulations for sawmills and logging operators. Don't handle a lot with down here, so we don't run into those a lot. And obviously type stuff. Some special things regarding and truckers who have some special regulations that they have to follow. And we're not going to go into detail about that today because we don't see a lot of those risks either. If you do have questions, please email me or feel free to call us for those additional answers. Employee. Every person engaged in employment. First of all would be appointments, contracts for hire, apprenticeships, includes people lawfully or unlawfully employed, or any undocumented workers. It also includes temporary, part-time, and seasonal workers. Casual, basically who's excluded as an employee? Well, casual employees, those are basically persons whose employment is both casual and not in the course of the trade, business, profession, or occupation of his employer. Domestic servants, those would be people like your house cleaning crew, and somebody that's handling your yard work, or doing laundry at your house. Anybody that helps you in your home would be looked at as a domestic servant. By you at the household, but not a business, a certain railroad employee. So, I think is the biggest people have. So we'll talk a little bit about that. There's different scenarios and how you come up with the count. For sole proprietors, LLC members, and partners, the other one is for corporate officers. So first we'll talk about sole proprietors, LLC members, and partners. They are not counted in the employee count. An example of that would be a husband and wife, LLC, and they have a business and a W-2 employee. You think there's 3 people. Actually, by law, they're not required to carry North Carolina workers' comp insurance. We would still recommend that they would carry insurance just because of the one employee, but by law, they wouldn't be required to carry it. LLC members would not be included in the count. Those people are also automatically excluded on a North Carolina workers' comp policy and would have to elect to be included under the coverage. They still don't included in the count, but they would be included in the coverage by election. Same with sole proprietors in that category. Sole proprietor could be just a single person who starts a business and then hires one employee. Again, that would be only one in the count. They wouldn't be required to carry it, and that they would carry it because of the employee exposure. The second category would be any type of corporations or corporate officers. This is where people, I think, get. For an example, our corporation has 2 corporate officers, Michelle and myself. And we had 1 employee many years ago. So at that time, because corporate officers are in the count of employees, we need workers' comp, even though we really only have the owners as employees. So again, the 3 or more count would make you have to get a workers' comp policy and maintain and enforce, whether that person was part-time, full-time, or any of the other categories that would make them become an employee of your company. With corporate officers, they're automatically included in the coverage from a workers' comp policy. He can elect to be excluded from coverage. Maybe your involvement in the business, you want to cut down your costs. to exclude yourself from coverage, only pay for the premium employee that you were working.
Couple quick questions for you, Terry. Let's pause for a moment and just talk about some of the screens that we just looked at.
Sure.
How often is an employee that's defined as casual?
Casual, you think of a lot of people that might pay cash. So maybe you have a business like a contracting, and you normally can handle the stuff yourself, but all of a sudden you get really busy. Maybe you do deck repair, so you have a buddy or two who can help you that day. Bring them on and pay them cash for their help that day. And while they're working for you, one of them slips down some deck stairs and breaks his ankle and comes to you to take care of the stuff. By law, that person is going to be as an employee, most likely, because he was working for your operations, and you're going to be responsible for his injuries. It's just going to be whether they meet criteria on whether the state would fine you at that point for not having the workers' comp.
So the fact is that they said you're not required to carry it for casual people, but you're still responsible for the injuries.
Yes, from what I understand, basically how it would work would be if I have one employee and I'm not required by law maybe to carry workers' comp, and that employee becomes injured, it usually goes in front of the Industrial Commission for a hearing to determine whether that person should be compensated by you as the employee because of the injuries. Now, they can't fine you from not having it, but you still may be held responsible in employees' injuries and have to pay for that out of pocket if you don't have a workers' comp policy. We know from watching the news and reading insured in about, hey, do you have health insurance or not? If they get the $10,000 for surgery on their ankle and physical therapy after the fact, they're going to come to you since you were in charge of them during that work day when they got injured, and they're going to want some compensation. When you tell them no because, hey, you're not my employee, that's usually when it gets brought to the Industrial Commission and they have a hearing and that determination's made. Again, you won't be fined if you're under the 3 or more count, but you still may be held liable to pay for that person's injuries.
For the corporate exclude your money, and that brought up a question that I was thinking of. So in order to save money, some people will just not carry workers' comp if they have less than 3 employees. You just said that I could still be to carry it, or not be required to carry it, but responsible. There's a difference, required, responsible. Right. If I'm responsible for the injuries though, wouldn't it be prudent to carry it and build that into my costs and maybe exclude myself, especially if I'm an office type exposure, even if I'm a contractor, but I'm not doing the work. So I have less chance of being injured. I know that, so I don't have to worry about those things.
Right, exactly. I think you have to look at every situation, and your agent should be able to talk to you about that. For an example, I'm talking with a client right now who does do some office exposures, and situation, and her husband do travel in their vehicle to and from appointments. So their code that would be used is one that's to include them in the cost. A lot of times I find people who have businesses pay themselves not very much. So, they might be paying themselves $10,000 maybe for tax purposes. But when you do include yourself in the workers' comp coverage, there is a set payroll that they use. I believe right now it's right around $46,200, somewhere in that mark. Whether you make less than that, and it goes up to the 80-some thousand mark, and whatever your true payroll in between those two figures are. But the minimum amount would be that 46.2 in that area, where they would use that payroll to calculate the premium for you based on whatever class code that you fit into.
Okay, so let's move on. Talk a little bit more about the contractors. You mentioned that let's talk about that, because
a lot of times, and especially people that I work with a lot of contractors, whether it's electrical, plumbing, landscape contractors, and other types of businesses. You could have a business and you could subcontract. Maybe you don't do brakes, so you subcontract out to work. Maybe you're a advertising company and you outsource a certain thing. The general practice would be to obtain a certificate of insurance for liability and for workers' comp from that person and file, and make sure that policy is active from the time frame that they perform the operations for you. About to employees, maybe it's one of their employees that gets hurt, but you're the one that basically was acting like a general contractor per se underneath that sub. It's going to fall to your policy, and your insurance carrier is going to pay. Insurance carriers most of the time charge you on audits for those uninsured subcontractors, sometimes even if they're sole proprietors, and we'll answer some questions about that later.
Super. So let's talk about where you get workers' compensation coverage.
There's a couple different ways you can get workers' comp. One is to go through an agent, and they'll gather information from you, determine your type of operations, and find the best market that's suitable for you in the standard insurance market. That could be companies like Erie or Hartford or Accident Fund or Travelers or Liberty Mutual. Those are standard type markets, but they only insure certain risks. Or maybe you need to have 2 years of experience, prior workers' compensation coverage to be able to show. Then you can also go to the assigned risk pool, which here is the North Carolina, and that is an area where you go to and make an application to, and the is assigned to, and there's some in regards to that it's North Carolina specific most of the time. So if you're a business that has to go to the rate bureau but has maybe some multi-state exposures, then there may be some intricacies that you have to work out with your agent on how those other specific states are handled. But those are the main two markets that you can obtain coverage from. You can also self-insure. Self-insure, you have to basically, they do an assessment of your financial solvency, and you can contact the Department of Insurance, and there's the phone to discuss with them whether you're able to. Think most of the time people don't qualify to become self-insured. They're usually with much bigger financial assets who have liquidity of money that could take care of a very expensive workers' comp claim if it would happen.
Aren't there also some requirements to hold that cash? I believe they have to have a certain amount of cash in reserve.
Yes,
in order
it'd
to
be just like like an insurance company would have to do. That money reserved somewhere. Unfortunately, most of the average businesses that how much does workers' comp cost? Really, it varies. You know, from anywhere from an office risk to install towers and climb 150 feet in the air, or roofers. The margin of rate you as a business. Usually a 4-digit code. In that class code, it's given a percentage of the dollars and cents for every $100 of payroll that you would pay that employee. So for an example, if you took $100,000 of payroll, the rate was $10 per 100. Then you would take the 100,000 divided by 100 times the $10, and that would be your premium for that class code. There are some other charges, one called an expense constant. There's also some catastrophe and terrorism charges that get added into the overall workers' comp premium. Plus there's also an experience mod that you may be assigned if you're over a certain you could get a workers' compensation mod, and then that mod would be used to additional money if the mod per se was like 1.10, or if it was 0.90, you'd save 10% on your rate. But again, you have to be paying a nice size amount of premium before a mod gets assigned, and then that mod sticks with you as long as you still meet those qualifications to have the experience mod.
So what if we do multiple, for example, we do roof repairs, we also do siding, we do windows, we do pressure washing. So we have different classifications for, you know, our workers. How is that all will be the most expensive?
Right. And that example there would be a contractor and who may be doing residential construction, and all his employees might be, if he does the whole project with, might be, you know, a code 5645, which is, you know, $17 for a payroll. If you're a company that maybe does some, let's say, deck staining, we'll use that as an example, but then you do some, and every once in a while, there's an issue on the roof, and that employee goes up there and fixes the hole in the roof too. You can separate payroll in certain class codes, and what you would want to do is make sure you track the payroll jobs that could be separated into codes. If you do not separate payroll, then what happens is they take the payroll for that person and they put it in the highest rated class code of all the things that that person does, and obviously the rate would be higher. So if you had, for example, we have somebody that installs solar panels, and they do it on roofs at times and they do it on the ground at times. So he has the same employees do both. What he should be doing is separating the payroll for those employees when they're up on the roof doing the installs compared to when they're down on the ground doing the installs, and his premium would be less than if he just didn't track payroll, maybe using the workers' comp code as the tracking device for his payout on those different jobs. His premium would be more if they all got thrown into the highest rated class, which would be roofing.
Awesome. So what I'm hearing you say is that you should be working with your agent to make sure that the agent understands fully what you're doing, so that when the audit time comes, and we're going to talk about that in a minute, but when that comes, that you don't have things misclassified because you didn't.
Yes, and your payroll company should be able to help you with software now. It's very easy to help classify employees and separate that stuff out.
Super. So obviously we showed you, here's some of the things that can happen if you are required to carry it and don't carry workers' comp.
Yes, and these, we're not really sure what happened. Letter is sent to a person and they are guilty of not having it, and they have to go to a hearing, and whether they end up paying the whole amount of the fine or if it's reduced. So we're looking for some input back from some clients after they go through the process. But fines that I've seen over the last couple times have been stiff. We're talking over $15,000. One was $83,000. And for a small business who lives month to month with their cash flow, that is bad news. It could be the decision to shut it down. And that could be easily avoided by making sure you understand what the guidelines are, talk with your agent, let them educate you, and please take their advice when they tell you you need it. And I know it's expensive, but it's a lot less expensive than paying the fines.
And not just the fines, but also the aggravation, the frustration, the sleepless nights. As business owners, we have enough of that. We don't need to add anything else to our plate that we could have prevented.
Absolutely. And, you know, it's just time is money, and, you know, it all adds up.
So in my opinion, the responsibility does go beyond just what you mentioned this already, but even though the law doesn't require you to carry it when you have one employee, you are responsible for that employee's injury. You also have a moral obligation to put that into consideration. For instance, with you can, if you're good, then you just and I know our clients don't want to put themselves in that position.
You know, most of the time, if you're working for who knows what the risk, they're going to require you to carry it, even if you don't have any employees, mainly because they want the stopgap of having your workers' comp insurance coverage on file so that they don't get hit with you on their audit. That one day you decide to bring a buddy along to help and he gets hurt, that could be the person that falls to that person that hired you or subcontract that work out to you.
About this a minute ago, but making sure that you understand the most cost-effective way to classify your jobs as you're going throughout the year is very, very important. So make sure that you get up with your agent and that you fully understand. You don't end up in a situation where your entire operation what you actually do.
Yes.
The thing that you can do is take 10 minutes out of your day to reach out to your insurance agent and ask. We're the clients of ours already. We are a resource for you. If you're not a client, to be a resource for you, we're happy to point you. Also, the Industrial Commission's website, where we took a lot of our information, and we'll share it with you in its entirety so that you'll be able to look back at that. We're also going to share this audio with you as well so that you're able to review it again. If you have a question, look it over, but most importantly, reach out to us and ask us some questions. Some time for questions. So I am going to jump right into them. Up while we're in case you so that we can answer it live. If you think of one later though, don't hesitate to reach out. There's our phone number. So Terry, what questions do you see coming through on the email?
Okay, I've got one here from, I think it's Taisha. I hope I said that right. Work comp question, obviously. It says sole proprietors are not required to carry workers' comp insurance, yet the auditors make us pay for it. Why? We end up paying for vendors who do not carry workers' comp. Vendors carry their own workers' comp policy. Great question. Every auditor's situation, it doesn't always mean that they don't have employees. So what usually happens is when you have a guy who's a sole proprietor, let's say it's Jim Smith, and it's Jim Smith's Plumbing, and he's a sole proprietor, doing business as Jim Smith's Plumbing. He's a sole proprietor. So he does no workers' comp. You have him, you sub a job to him, and he doesn't have any insurance. Well, then what will happen at audit, they'll see the payout to Jim Smith. Maybe it's $10,000 for the course of the audit period. And they put that $10,000 on your policy in the audit for the code of plumbing, and it cost you an additional $700. So what happens is at that point, there's two ways it could be handled. One, some auditors will end up going ahead, and if you can get a business card from the person, an invoice from that person, and basically they have no employees. Most of the time, when monitor handles it differently, companies handle it differently. The workers' comp statutes basically say if they're uninsured that they can't, you're paying for them if you don't have a cert and if you subcontracted work out to them. But I have seen it where if you can provide those types of documents and talk with the auditor, if those are, they will tell them is there's, and a lot of other types of companies that are maybe should have it or only have one employee and maybe they don't need it, but they got employees. It's the employees that you have to worry about falling to your party for you to end up paying the claim. So sole proprietors are the toughest ones because you think sole, you think one, but sometimes it's not. They have people working for them. Like she said, it's legal, not legal, cash laborers. To come to the per day.
Excellent. So I have a few more questions that have come in on the email. I have a question about audits, but I don't want us to go into it too elaborate because we're actually going to do another webinar just on audits because that's a huge source of confusion for our clients.
Yes.
Seems like it costs money when it shouldn't, and it most importantly, again, just takes time. And we'd like you to be able to avoid that. We know that you can avoid that. Terry's an expert if you keep your files throughout the year, so that way when it comes to the audit, it's not stressful and it's not a big ordeal like it can be for some folks.
Right.
So Mike sent us a question though about audits. Can you just briefly explain what audit is and what you
policy? Basically, it's your guess what you're going to pay certain people in certain class codes over the period of 12 months. So an audit is a look back of that prior period and what risk exposure that they had during that time frame. So they'll end up gathering, 941s, the tax record, determine whether you paid your payroll or that they owe you a refund, and it works both ways. So you try to estimate the best you can and be as close, and after a few years, most of the time you're pretty close. For payroll or weekly, bi-weekly, or monthly payroll, and they charge you premium as you go, which somewhat eliminates the payroll gathering information for the audit, but it still doesn't eliminate the audit because they still have to audit that you are doing the same operations, nothing's changed, no ownership's changed, the states that you have operated are the same. So it doesn't eliminate the audit like a lot of people like to tell you most of the time, but it does hinder you from possibly gathering all that you would need payroll portion.
That would be a good thing for seasonal things that maybe have the bulk of their bigger months, but then come their cash flows dried up. So rather than spending it out over a 12-month period, they can pay the bulk of it when they have the bulk of their cash. office, but it looks like our broadcast is still going. So we are going to work on getting it back up. We have just one last question. There we go.
Sorry about that.
Excellent. So just a little technology glitch, but hey, so last question. You mentioned multi-states just a minute ago, and you mentioned a little bit in the presentation.
Right.
Because of our proximity to South Carolina and Virginia and Tennessee, I mean, where Charlotte's located, you can be in another state in a couple hours.
Mm-hmm.
Just give a brief overview for everybody about that. If you have multiple state exposure, or you think you may in the upcoming year, what do you need to do?
Well, it would be really hard to do in a brief amount of time, because it's very complex regarding multi-state exposures. So make sure you're speaking with your agent about any operations you're doing out of state, whether it's going for deliveries, whether it's going across state lines to do a job and then returning. But there are things that in certain situations, policies on that I do reviews don't have that state listed in what's called item 3A on your workers. So policies different by endorsement. You can get more time to be able to report that to your carrier. But so you be put in item 3A to be triggered. Then your state, if let's say the law of any health out the state absolutely have there's a law of that could
Excellent. So I think some important to take a somebody getting injured. And then the next thing, the whole reason that we're doing this is to make sure that time, and we want to make sure it's done right the first time, so that you don't have the headache of that you may your employee is going to be in that situation. So I hope that the information has been informative. Again, if you have any questions, though, reach out to Terry. His email is terry@nc.com. You can take a look on. So thank you so much for spending the morning with us. We appreciate it, and we hope that you've enjoyed it.
Thank you.